All right, so before you guys click off this video, I want you to genuinely take a step back here and look at what I'm about to show you. And this is not just going to be simple trendline SMA trading. This is going into market fundamentals. This is going into a bit of a deeper problem that's starting to show on the surface. We're going to really dive into some stuff here. We're going to start off here with Photoshop just because I want to go over this this strike zone here for the end of the year. But this is really important. So the reason we're starting here is just so I can kind of draw on it here if I have to. So we're going to start off here looking at the, I guess, strike zone going into the end of the year here. So we know that this 7,000 level right in here is pretty much what everyone is targeting. So this is important because you can see here that we have a lot of net dealer short here as well as net dealer long. In between the zone here, this is going to create a pin, right? Like we know this here is going to be a complete pin. The problem we have though is everything above it is net short, right? So the JP Morgan short up here, market dealers are short up here. So there's a bit of an issue. So you know right now you closed the week kind of in the zone, right? Like you closed in this 30-point strike here that I said was going to happen, right? Like if you guys watched the last video, I said it was in this 30-point fly zone that we were probably going to enter into. Sure enough, we did, and we're right in the zone. So we closed at 6849, right? 6849. It's about right here, roughly. It's about right in between this zone, right? So you actually have a chance here to kind of push up probably to somewhere in this strike, which is this would be around that 6920 to 6950 level. The IC calls for Monday, which is the iron corridor calls, they're sitting around 6810 to 6870, I believe. So expect the price kind of to be within that range on Monday, right? There's a bigger issue though. To get these 7,000 strikes in the money, the price has to actually push up into this zone, right? Because if you look at, you know, depending how far back those strikes are, like if you bought them earlier in the year, or you bought them a few months ago, whatever, the strike needs to actually break above 7,000, not just stop at 7,000, but actually get higher into here. The problem you're going to face is as the month goes on, and this is a zone where bears can actually gain control and bears can put a good stance into fight, there's a very good chance that this can actually create a lot of downside hedging, right? Like the Wall Street's back at the desk. It's not going to be easy mode like it was last week. Wall Street's back at the desk this week. Thanksgiving's over. Just expect this week to be a lot more difficult and volatile than it was before. There's a very, 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 very good chance that you get stuck in this zone. As time goes on, those 7,000 strike contracts will go into what's called theta decay. Now, if you understand how Greeks work, we'll pull it up. So there's a lot of good write-ups on how Greeks work and whatnot, but the primary one I want to follow on here is theta decay, right? And that, you know, represents the rate of change between the option price and time or time sensitivity, known as options time decay. Theta indicates the amount of an options price would decrease as the time expiration decreases, right? So you can go more into these Greeks if you want. Feel free to read up on them. But the problem you're going to face is if you don't get acceptance into these zones, that theta decay is going to ramp up. So you're expecting your option to move up, but the theta decay is going to do the opposite and go down. And if price, for some reason, stalls out again, oh, whoops, pardon me, what am I doing? If price stalls out again, and you get stalled out back up in these zones, and you start to kind of do a downward movement, that's only going to amplify. And you have to take into effect that the IV crush of those contracts is also going to take effect and start making them bleed harder. So you're in a pivotal point here because there's a very, very good chance that if the bears get control here, and there is a, you know, kind of darker scenario here that I've been talking about for some time now, there's a very good chance that, yeah, either price is going to, one, get pinned, or two, the top of the market for some time being is going to be in this scenario. But again, if those contracts expire, or people sell at a loss, whatever, that creates more of a net dealer short. And what that's going to create is more red lines out here like this, and it's going to create more downward pressure on the market, right? And there's some individual stocks that have been suffering, you know, as well as the NASDAQ lagging that we discussed in the last video. You know, stocks like NVIDIA, they look fucking awful, like absolutely fucking awful. Now's the time where we have to go in here and really figure out what is going to happen. Okay, and again, this isn't the spooky one. I'm not saying that we're going to get, you know, a 2008 crash, but a genuine correction is near. Doesn't matter how you face it. It's near. It could be December, it could be January. It's close. In January, we have the Supreme Court tariff ruling. Okay, they're going to figure out what's illegal and what's not. That could create a possible amplified debt scenario where the government's going to have to refund certain sectors, certain countries. That might not be good, and that might spook bonds. That might do weird things with the dollar. We don't know yet. Okay, we have to wait for that to play out. That's just some thesis. We also have the Bank of Japan possibly raising rates, and I do think that's going to happen. I think they're going to intervene a lot earlier than people expect, and some stuff is going to change there. Credit spreads are also showing a warning, and we're going to get into that here in a second. We're actually going to go to the credit spreads now and take a look. So these are options adjusted credit spreads. So this follows the VIX very closely, and we're going to overlay the VIX here just so we can get a really close analysis here. So you can see that, you know, when these credit spreads get kind of blown out, they get wonky, the VIX also follows. We're going to change the VIX to green just so it's a little bit easier to see. But you can see, like, back in April, right? Like, that's why we had that huge kind of capults, you know, back here in August. We had the Volmageddon. December was kind of volatile. So when these credit spreads start to show amplification, you know, it's not a good sign. Credit spreads are elevated, and the market's actually higher than what it was when this was going on, right? Like if we overlay the SPX now, so like for example, the credit spread's still pretty elevated, right? Like when we got to here, they were down. They're actually still holding up high while we're trying to break out into a new zone, right? Like they're not breaking down, and that's a little concerning. You know, I think there's a good chance for it to kind of bounce off this 2.9 to kind of 2.85 level roughly. If it does come down this far, there's a good chance for this to really kick up. And it's the same thing for the yield adjusted index here, or the yield adjusted spread, pardon me. You know, they're not looking like they're ready to just go lower. In fact, it's still elevated. Doesn't matter how you slice it. You know, like this is something you have to pay attention to. These usually send a warning long before the market does. You know, this is something you've probably seen on Twitter recently, and this is showing credit default swaps on things like Oracle and NVIDIA and CoreWeave, couple other ones up there. But this is the Oracle one I really want to pay attention to. If you guys don't know how the AI cycle has been and how the funding goes and whatnot, I'd look into it. Since August and October, these things have doubled, right? This is actually an older image from earlier in November. It's closer to 120 points now, but it's basically doubled from 40 to 120. So you went, like what I mean is it went to 80, it went to 120, and it's still on the rise. And credit default swaps, if you guys remember what happened in 2008, this is different because this is for a single stock they're doing it for, but credit default swaps are basically a way to hedge if you think like a debt is going to implode somewhere. There's a couple of different terms and like ways to do it, but you could do it like against banks, like on bank bonds, or you know, things like other security investments, but specifically this is for Oracle. So this is for basically the company Oracle, their stock. Yeah, and that's not a good sign, right? Like if you remember kind of in that COVID era, they were pretty high as well. And I'll be honest, I've always said this, I think bond bros, when it comes to spotting cracks in markets, are a lot better than just your typical stock traders. I think they send warnings and detect them a lot quicker than the majority of people do. But just going back here, like, so we're going to take a look now and do some charting and as well as some TPO study. But we closed right at the VWAP, right? In fact, if you look at it, it didn't get acceptance above it. It closed right at it. And I said that was going to happen. I said in the last video, you know, we're right under it. You want to target this area. We're there. Can this week provide some validation above, right? Like, can it get above or not? That's the question. right? And we know, we just went over in the Greeks, there's a lot of resistance in this general strike area. Can the bulls get through that, right? And recently over the weekend here, there was some Venezuela talk. So that's a little interesting, right? Is that going to amp up? Is it not? I don't know. I really don't. There's a chance for it. I'm just not sure what exactly happens. From a market perspective here, we're going to swap over to this chart, but we're closing on a hanging man monthly candle. Hanging mans can be bearish. I want to wait to see kind of how the first 3 weeks of December play out. And the reason why the first 3 weeks are so important is we'll get into that in a second. But hanging man, this could be extremely bearish. Like you could definitely start like a failed break attempt here and then move lower in the month and create a lower candle. Look at that candle structure. It looks like a fucking Christmas tree. But that's a hanging man candle, right? And we've had these before in the past where, you know, like you get an inverted hanging man or an inverted hammer bar, I'd call that. There's one here. These can signal reversal patterns. I'm not saying that this has to, but like, you know, here's like another one. You know, here's another one here. Here's another one here. So it is a little bit of something to pay attention to, and it's kind of funny that those gamma strikes that I was talking about on this 100-year chart line, and I don't necessarily agree with this, like in trend lines and whatnot, but it's kind of funny how those strikes, where I was talking about that 7,000 strike area, it's kind of looking like that could be the potential of the top of the channel, right? And I mean, this has worked in history, and you can go look at the Dow theory as well and how the market follows the Dow Jones, right? Like the Dow Jones, usually when it gets to the top of this line here, that signifies a correction. So there is definitely some bearishness out there. Like that, this isn't something to just blindly ignore and say, ah, you know, nothing's going to happen, right? This cycle has been so similar to the 90s, and that's why I have this overlaid bar pattern here. Like this is the 90s cycle here. And oh, there's a buy order going off for Bitcoin. But I guess it's slightly deviated now, and that's why this is a fractal, right? Like fractals aren't perfect. They're just supposed to show deviations. But you can clearly see like this pump here, this could be here, right? Like this kind of sweep below, like that could be your pump. There's a good chance that you can break below here if things get really frothy and people get nervous. And in confluence to that, to why I said December is so critical, is if in history here we look at the VIX and look at kind of where some breakdowns have happened, we are now coming into a zone here where this is going to target the early time of December. And I'll be honest, I think December 5th is when this will hit the top of this wedge again before it breaks lower. The next part of this wedge, if it does happen like this, could be in the late part of January. And I've said Q1 is probably going to be rough and there will be a big correction. Like I really do think Q1 will happen. But this VVIX pattern, like every time this thing has happened, it's always been bang on. Like it always shows when there's going to be a structural breakdown. So I think that this week, if we don't make a new all-time high in the SPX and we don't hold it, I genuinely think that some volatility is going to come in. And we talked about those VIX strikes, those big VIX strikes, and I'm not talking little $1-2 million sizes like that. That's a $12 million bet, and there's hedging going on behind it. If we get to December 5th here on Friday, and historically the last little bit here, Thursdays have been a sell-off day, right? There's a Thursday, there's a Thursday, there's a Thursday, there's a Thursday. If we don't get to a new all-time high by Wednesday, and I mean this, like if we don't get above like this strike box here, I genuinely think you guys are in for some volatility. I'm not going to say my positioning right now just because, you know, I'll let it play out and I'll let it do its talking, right? There are some major cracks starting to show, and this is not the easy mode market that it was the last 7 months or 8 months, however long it's fucking been. Gold here has been ripping up. It looks like it wants to rip. Silver looks like it wants to rip. Silver's making new all-time highs right now. The market's not even open yet, and silver's making new all-time highs. right? So there's some weird stuff going on. And if Trump really does pull this plug on Venezuela, I think that's the perfect time to set up a VIX correction like I've been talking about in previous videos, where we could get a good VIX pop, and that might mark our correction and the start of a little bit of a trend into the middle of the year. And I've said this is bullish VIX structure. This looks like everything's fine. You don't want to see the VIX catch a low here and then shoot up, right? Like a high VIX, that's a buying point. Like these are buying points when it gets up here. You don't want a low VIX and for volatility to come in, especially in the scenario we are in right now. And I've explained it all pretty thoroughly. You can look at it from a Greeks exposure, you can look at it from a credit spread exposure. We can look at bonds here. Bonds haven't really sent lower. If anything, they're holding their structure pretty well. Doesn't matter if you look at the 10-year, doesn't matter if you look at the 30-year. The Japanese bonds are absolutely fucking ripping. And I've been saying this on Twitter for the last few months, but I generally think it's the foreign markets that are going to start this. If the Japanese market goes, I think the US will follow shortly after. You have issues now too where if AI is not profitable like they're saying it is, and the revenue from that, the cost of electricity, power grid upgrades, data centers, the profitability on that might flip negative. AI could take jobs, and the unemployment rate could spike. Now, I'm not saying that happens this year. Let's just be clear. That could happen 5 years from now. It could happen 10 years from now. But I want to just point out here that you kind of have this double-edged axe where these stocks, like the Mag 7, are all extremely overvalued, right? Like a lot of them. Like a lot of them have extremely high valuations. Doesn't matter how you slice it, right? They've had high valuation. We know this. You can't have less profit, more debt, and unemployment issues. You can't have AI take employment away, create long-term debt, long-term non-profitability, and have that double-edged sword, if that makes sense, right? Doesn't matter if you cut interest rates, doesn't matter if you lift them, whatever. You're going to create this double-edged sword of you're kind of in a clusterfuck, really, right? And listen, I don't want to sit here and say that the market's going to zero tomorrow. I don't think it is. That's not what I'm saying. I think a correction is definitely possible. Is definitely possible, right? You can look at the SPX divided by M2 as well, and you could just do, like, you might get a drop here into December and a peak into January followed by another drop into Q1 and that mid to end year rally, right? Like if we look at this overlaid, it is this is just a forecast pattern. This is exactly how the 90s have been playing out, and this is why I said it's following the 90s so closely, right? Like you have a very good chance here to follow this pattern. And I do think that 2027, 2028 are going to be bearish. I really do. Like this doesn't, I fail to believe that this follows damn near 1-to-1 this whole cycle, right? Like it's, it's pretty fucking bang on. Doesn't really matter how you slice it. And it is showing similar patterns. Like it has been on all these stocks, right? So we're going to go down here into our TPO here and take a look at what's going on with the SPX. So from a daily TPO perspective, you know, things are fine. We did close kind of right at the point of control from the previous breakdown. This is weird, right? Because now you have to look at it as if, can you reclaim this week and get acceptance above? And your next target, obviously, as we were talking about, is going to be that higher strike zone here, right? So that all-time high point of control is 69.09. So can you get this and push up into that? Or do you look above and fail and do some sort of breakdown below, right? And you'd probably target these single prints here and this big previous point of control here at 60, let's call it 66.26, right? You now have to be able to look through the lens and say, okay, how's this week playing out? Are we going to open up a negative exposure, positive exposure? I'll be honest, the futures look pretty rough right now. This can change overnight. This doesn't mean anything. It's 4 in the afternoon. But I will say this, from a monthly close perspective, if we just looked at the SPX, and we'll cover Bitcoin a little bit later, this gets frothy. There's no clear directioning yet. It doesn't matter if you're a bull, bear. We don't know if you're going to just get a quick boom right through. whatever? Are you going to get a complete catapult up? We don't know. But I will say this, and I've been saying this. I think everybody's wrong. I will hold that we don't see 7,000 at the end of the year. I will hold that conviction. If we do get it, by all means, great. But just remember, you have to get into this strike zone up here for any of those long-dated calls to get in the money and not be completely vulgar crushed and data decay, IV crushed, whatever you want to call it. Okay? So I'm not saying sell everything and fucking flock to cash, whatever. Flock to gold. It's not what I'm saying. I'm saying that you are in a scenario now where this must break out. It must. If you get a back test off this, those contracts are gonna fucking start bleeding hard. Like, really hard. And they're gonna start bleeding bad. It's not gonna be fun. And it's gonna create a big bearish divergence going into Q1. And I just want you guys to put that in the back of your head. If you can somehow catapult above, which I'll be honest, I don't know how they're going to get the liquidity to borrow whatever and push that market like up higher than that 7,200 zone, I don't think that's possible. And I especially don't think it's possible if the Fed holds rates or doesn't cut them big enough, right? Because if you understand how interest rates work, when you cut them, borrowing money is cheaper. When you raise them, borrowing money is more expensive. Like, it's not as easy to do. And Jerome Powell does speak tomorrow night. Is it tomorrow night? Is tomorrow the 1st? He does speak tomorrow night. And there's probably going to be some questions about, are they going to lift rates? Are they not? What are they going to do? Are they going to cut them? Are they going to hold them? They already said they were going to hold, but some members saying they're going to cut. But if Jay Powell speaks tomorrow night at the convention he's going to be at and says, hey, we're not sure yet, or there's some unsurety, be prepared for a spook. And I told you guys this. You guys are opening up this week into the zone of large put hedging. Okay, so don't just go and be the guy that buys the $7,000 strike for this week. I can't give financial advice, do what you want. But my humble opinion, I will not be doing that. Yeah, right? Like, from a TPO's perspective here, we held above all right, but we've closed at the point of control strike. And this is going to be your flippening. Are you going to get, like we explained, are we going to get push above or break below? So just keep that in mind for this week. We'll even swap over here. We'll just do a bit of a larger time frame here. Let's go over to the weekly. Yeah, there's a lot of elevator single print in here. So this gets weird because, man. Yeah, like, even on the weekly, like, we're at the point of control. Like that here, it's actually under it. The blocks didn't raise up that high. So you're in a weird spot. Like, you truly are in a weird spot. This is not a place to be complacent. Like, this is not, you know, to say, oh my God, I know the next move. This is what's going to happen. This is not a place where you just want to, you know, buy massive of anything. I'll be honest, I am on the short side. I just scalped a nice 50% win on Bitcoin on a short as we opened lower. That was an easy call for me personally, but I've said this. If you can trade stocks, you can trade Bitcoin like a fucking cat's ass. It's just easier. But I'll say this. I'm more short-sided right now than I am long. I will scalp either way. I don't care. I will never just be, I'm the bear, I'm the bull, whatever. But right now, you are in a bearish environment. It doesn't matter if the prices are up, whatever. Bitcoin always front runs liquidity. It's down. I think a bigger warning than people are expecting is coming. But again, I just want to say I don't think the black swan is happening yet. I just want to point out that you are in a weird environment. As for the NASDAQ, it's, again, lagging behind the S&P still. The S&P is near that new all-time highs. The NASDAQ's down about 1,000 points from its all-time high. Are you going to get this and push up? Or are you just going to brigade bolt through? Or are you going to fall back into the range? It's hard to say, right? Of course, I didn't draw a line below, but you guys kind of know the range. It's lagging still. And Bitcoin follows this heavily. This is not a good sign, to say the least. You know, and even if you go look at the QQQ we were talking about last week, right? Shit ton of single prints below, right? Like, this is the weekly TPO profile. So we can actually merge some of these. But a lot of single prints below here. Point of control is up here at 620. We explained that in the last episode, that 620 level, how it was critical. Break down here on a daily as well. But again, we failed to get to that 620 level, right? So you're actually opening up below it again. You are kind of right at the value area low of this previous breakdown, but I want to see a bullish acceptance above. I don't want to see just a fade away and break, if that makes sense, right? Before we get into Bitcoin, I want to take a look at MSTR. This has been following that previous 2021 cycle perfectly. If their MNAV, I think it's if it gets below 1, they will be forced to sell. Just keep that in mind. Like, there's a good chance they will have to sell if it gets below 1. You might get a little push up here going into January, which again, I expect a small rally into January before that Supreme Court tariff thing. But just be careful. Like, this does not look healthy. And the company, like, it's been struggling with Bitcoin being down. It doesn't look good. And remember that MNAV, if it gets below 1, they're going to have to sell. Like, it's not going to be good, right? Yeah. So just be careful. So we can combine this weekly now with Bitcoin as a weekly TPO thing. Big point of control here is sitting at that 91,000 zone. There's a yearly open. There's a previous value area low. We've talked about this before. You need to reclaim this yearly open. And right now, we're starting to get back into this previous yearly value area low. We need to see a bounce like right now. Like, you need to see a bounce off here right now. If you do something like this, where you come down and, I don't know, you fail to get above and you shoot lower, that's not a good sign. You want to see a bounce here and at least a bounce back into this 91 zone. Okay? On the daily, yeah, look at this. We just have an elevator down. It did fill this single print, which is good. And I'm hoping that it just kind of bounces off this point of control here. But you'll see that again. Like, all it did was wick to the yearly open, right? It just wicked to it. It didn't get accepted above. It's nothing. Like, it just wicked to it. And, you know, again, I failed to hold this multi-day composite here off this value area high. And sure enough, we broke lower. And look at this. Like, perfect structure here. Fails to grab the point of control of this multi-composite here. Like, this multi-day range. Like just rejected off it. And now it's elevated lower. So for the Bitcoin bros, like myself, we really need to see a bounce here. Like, you don't want to see acceptance below this previous multi-day composite. You don't want to see a bounce here, fail, rejection of the value area low and down. Right? Like, you want to see a bounce coming into here, do something like this, and up. So I will say this. I do think there is an attempt to rally this week out of both markets. I think the SPX will try. I think the Bitcoin will try. I don't think it's going to zero just yet. But I will say this. You need some bullish pressure here this week. What happens in the overnight doesn't mean anything. Okay? This could all change. Right? We've seen Mondays before where they just elevator gap up, bulls on parade. So just be mindful of the possible scenarios that could play out here. Right? This is not good that we're elevatoring down like this. In fact, I want to be out of this by Tuesday, right? Otherwise, you're just going to get a big rejection. I just want you guys to, go into this week saying that you are starting off in the froth, right? The XPX is starting off in resistance. Bitcoin's already breaking below. Can it get above or not? So, the overnight is kind of weak. Keep that in mind. But this can improve over the night as the night goes on. Japanese market in the overnight is down 1% as well. There's some divergence right now, okay? But remember, if we fuck off from this 6,900 level on the SPX and we move lower, shit's gonna get real quick. And there is nothing below 6,400 to save us besides this one strike zone here. There is nothing. If this fucks off, and I'll be honest, I think it will, there's a very good chance you're just gonna hit lower. I just want you guys to go into this week saying that, knowing that you are starting off in the battle zone. Anything is possible right now. Anything is on the table. You could get the red Santa rally. You get the green Santa rally. Are you pre-Coca-Cola or post-Coca-Cola? Anything's possible. So going into this week, prepare yourselves. We know that SPX breadth is overextended. we know that on our RSI term, it's not looking great. The JP Morgan strikes, I did update. Someone pointed this out. Thank you for doing that. And it was honestly my bad. Are you going to get closer to the 7,000 wall by December 19th? Or are you going to get closer to the 633 by December 19th? The move is coming. And you don't want to be caught on the wrong side of the move. We just don't know what's going to happen yet. Okay? So, be prepared. Anything can happen. But yeah, guys, I hope this helps you kind of get a gauge for what might happen here. I hope this helps you make a good choice this week. But yeah, we'll catch you on the flip side.